Today, we are going to discuss the difference and similarities between commodity and equity market. The terms commodity and equity are quite commonly used when explaining investments and trade that takes place in the stock market. The main similarity between the two is that both equity and commodities are investment assets in which investors can invest their funds by purchasing or trading. It is important to understand the difference between what a commodity is and what equity means before applying them to the stock and commodity exchanges. Commodity, let's look into the commodity first. Commodity refers to a generic form of a product that is very basic and undifferentiated. Example, sugar, wheat, copper, coffee, etc. A commodity is a product that cannot be differentiated because every commodity is equal to each other and cannot be separated out. There are a number of commodities that are traded on exchanges, which include gold, silver, corn, coffee beans, copper, etc. These commodities are not physically traded on an exchange and instead traded through commodity futures and forward contracts. The price of futures or forward contracts. This will depend on the value of the commodity at the time of trading, and futures or forward contract will act as an agreement to buy or sell a specified quantity of the commodity at an agreed upon price. The trader in this instance actually does not seek to purchase the commodity, rather make a profit from the price fluctuations. Let's look into equity. Equity refers to some form of capital that is invested into a business or an asset that represents ownership held in a business. In a company balance sheet, the capital contributed by the owner and shares held by a shareholder represent equity as it shows ownership held in the company by others. Equity, on the other hand, refers to shares that are sold by a firm on a stock exchange. Once shares are purchased by an investor, they become a shareholder in the firm and hold an ownership interest. A shareholder's shareholding can be calculated as a percentage by looking at the number of shares held in relation to the total number of shares. So what is commodity versus equity? The only major similarity between commodities and equities is that they are both investment mediums. Commodities and equity are quite different to each other, as commodities are undifferentiated goods and equity is an investment made in a firm that provides the investor with an ownership stake. Even in the sense of trading platform, there are a number of differences between the two investment assets. Stocks and commodities trade on different types of exchanges. Stock trades on stock exchanges such as New York Stock Exchange, and commodities trade on commodity exchanges such as Chicago Mercantile Exchange, Multi-Commodity Exchange of India, etc. The period in which each can be held also differ, as stocks can be held by a shareholder for as long as the company is listed on a stock exchange, whereas futures or forward contracts have a shorter expiry period referred to as the delivery date. The other difference is that while equity investments are longer term and are focused on taking an ownership interest in a firm, commodities are bought and sold with the aim of making a profit through quick short-term trades. Let's come to the summary, that's the nutshell. Commodity refers to a generic form of a product that is very basic and undifferentiated. Equity refers to some form of capital that is invested into a business or an asset that represents ownership held in a business. In the context of stock and commodity exchanges, commodities are traded on a commodity exchange through futures and forwards. Equity refers to shares that are traded on a stock exchange and represent an ownership interest when purchased. Commodity trades are short-term and focused on making profits through price changes, and equity investments are usually made for a longer period of time with a focus on ownership in a successful firm. So that's the similarity and difference between commodity and equity.